Hello everyone, welcome to the live stream. This is your host ISTUDYPRICE here. Good morning to you guys. And today we have US bank holiday. So we can see there is no volume in the market. How tiny this daily candle is. Yesterday candle was a bullish candle, and we also took previous week high. So there is no such target near to the daily or weekly candles. So here we can see this previous week high got taken by the price. Price came back into this daily fair value gap. So we will not expect much today from the market. Let's move on to the gold and see how gold is moving. Yes, there is no data there either. So that's why we will not expect much from the markets today. So we will just analyze the charts and we will discuss about entry model. I will explain to you guys one of my favorite single entry model which I am trading for like 4 years now. So we can see there is no such a clear direction on the gold as well. Gold is still in this range. Here on the 4 hour we can see price is stuck into this range. So let's see on the daily time frame what actually price would do on here. Let's find out some PD arrays on the higher time frame. So we will look into this daily time frame chart. So here you can see how price came back into this daily BC. And after coming into this daily fair value gap, price couldn't close below this, and this fair value gaps moved price to the upside, and after that price basically filled this fair value gap, and now this is inversion on the daily and price getting support from this inversion fair value gap on the daily time frame. So here we can say that our next drawn liquidity would be this high for the upcoming week. We would probably see a draw to this liquidity. Price will move to this liquidity, and let's see how this weekly chart is looking right now. So on the weekly time frame we can see we have this wick here on the weekly time frame. So after that, so after taking the previous week high, according to the daily time frame, this could be the next target for the price. So why I am considering this high? Because price have already came back into this internal range liquidity, right? This one. So this is ERL. So I have explained in the previous live that basically price moves from ERL to IRL, right? And then IRL to ERL. So price came into this internal range liquidity, which is IRL, right? So the next target could be this external range liquidity, right? This one. And we can see actually PD arrays are forming in the direction of this bullish order flow, right? Why? Because price is failing these bearish PD arrays on the higher time frame. That means the order flow on the higher time frame is bullish, right? So after moving on to the 1 hour time frame, so we had this fair value gap on the 1 hour time frame, right? So after filling this fair value gap, price still consolidating in this area. Price is in this consolidation, right, phase. So on the hourly time frame, this could be the next target. So this is internal range liquidity. If we will compare this high to this high, right? So why I am confident about this high? Because we also have fair value gap above this high. So there are more reasons for the price to go higher to this high. So this is the analysis for the gold on the higher time frame according to the daily time frame. Daily time frame clearly indicating that price wants to go higher because it is failing the bearish PDRAs and getting the support from the bullish PDRAs, right? Yes, yes, you are right. Yes, Karthik, I am going to explain my trading model in today's lecture for the free for all of my viewers, because we will not take trade today. We have US bank holiday and there is no volume on the NASDAQ and the gold as well. So if you are watching the stream, please leave a like on the stream. I welcome you all again. Karthik. So Aman is asking, bro, let's assume you have to make entry on gold now. What will be your entry model? So Aman, if I will enter on the gold, my entry must be after the price break above this resistance area, right? So until price break above this consolidation area, I will not take any trade here. So if the price will break above this and close a candle body above these highs, then I will plan my trades. But below these highs, this is totally nonsense to enter in the market, because we can see these highs are basically resistance on the higher time frame, right? So if I will take you to the 4-hour time frame, you can see this is not a area to trade. Yes, we can mark 15-minute or 5-minute ORB. The NYSE basically today is closed, but how we mark opening range basically, if I will take you to the NASDAQ, so the first 15-minute will be our opening range on the NASDAQ after the 9:30 open, right? So let's say if the 9:30 candle will make a high and low after this candle, like here to here, then we will mark those highs. So then we will mark that high and low of the 9:30 15-minute candle, right? And we can use them to predict our bias, right? So let's say the first 15-minute candle will close like this in the bullish direction, right? So I will wait for the next candle to open here to create a wick downside, and after the price will continue into the buy direction like this, then I will plan my trade, right? So this is how we can Mark and trade the opening range after the NYSE open. So let me know if you are watching me from the South Asia region and you understand Hindi and Urdu as well. Yes, Karthik, before the second candle close. As the second candle close will, the second candle will break the previous candle high. On that high, I will plan my trade. So if you are new to this live stream, please leave a like and comment on the live stream. And if you have any question, you can ask me. Let's move on to the gold. We were basically analyzing the gold here on the 15-minute time frame. This is very tight range here. Yes, after the second candle close above the previous candle high, then I will only look for the bias if my bias is bullish according to the higher time frame, right? This is what my point was. If I am looking for the bullish entries and the first 15-minute candle close bullish, then I will wait for the next candle to break that previous candle high, then I will enter in the market. Yes, yes, Madasi, you are right. Since NYSE is closed, there won't be much of a move or big fair value gap formation or retracement. I guess only paper trading practice is better. Yes, we will not experience much volume today in the market because this is US bank holiday. So the institutions will not be in the market today. As you can see, after the opening, price is in this tight range. No, I will not put my stop loss um below the previous candle. So let's say if previous candle have a good volume in that candle, but I will trade that candle according to my lower time frame execution, right? So 15-minute time frame or candle is just for the confirmation, right? So let's say if I am trading on the 1-minute time frame, then I will definitely plan my trade according to the 1-minute time frame structure. Welcome, Sadi brother, welcome. So we have Euro USD here. Yes, Karthik, let me take you to the previous day price action on NASDAQ. So yesterday was a very tricky day. It was not a clean day. After the opening, you can see after the 9:30 open, price was stuck in this range. After this range, price made this low here, and on the 5-minute time frame we have this fair value gap, bearish fair value gap, right? So yesterday was a tough day on NASDAQ, but eventually we only have a single opportunity to take trade on the 5-minute time frame. After that, price failed to make a new high right here, and here we had this mitigation block, right? Why I am calling this a mitigation block? Because price failed to made a new high here. So let's say if price made a new made a new low here after taking this sell side liquidity and closed back above this bearish order block, then we will call this as a breaker block, right? So here on this example, price failed to make a new low and closed back above this bearish order block, right? Why I am considering this order block, not this? Because this high moved price to the downside, right? That's why I am considering this high, and this high was also in this bearish fair value gap. So let's name them. So here we have this inverted fair value gap, right? And this is going to be our mitigation block, right? And within this mitigation block we also have a fair value gap here, So what I am basically trying to teach you here, from these lows we can say that price didn't make a new low. That is a sign that price wants to go higher. After that, price filled this bearish order block and created this medication block, and also closed above this bearish fair value gap, right? So that was another confluence, and after that price closed above this bearish PD array, right? And after that price got a support from this bullish PD array, and this bearish PD array also turned into the bullish PD array, because now this is inverted fair value gap, right? So we will trade this into the opposite direction, right? So there were multiple confluences for the price to go higher on here. So there was this entry on the 5-minute time frame as price came back into this fair value gap here. Our stop loss could be here. So our stop loss could be below this medication block, right? And we will target like 2 hour, right? So this was the opportunity after the 9:30 open, right? So here we have a simple explanation for the medication block, right? Let me know if you don't understand medication block. So medication and breaker block are basically mostly to take trades in the reversal, right? So both of these so both of these basically blocks are reversal patterns. We will trade them in the reversals, right? Please let me know if you have any question or any doubt about this entry model which I have explained to you here. So this was the fair low here. After that price created this mitigation block, and I have also explained to you guys this advanced market structure shift. So the first candle which will rebalance the fair value gap. So if the price will break above or below that high or low later on, we can call this as advanced market structure shift. So this was another confluence that now our price action is reversing into the other direction, right? Like this. Karthik, please let me know if you understand this. So after that, we didn't have much in this price section. As you can see, price gets into the consolidation after that expansion. So price went into this consolidation after giving us this expansion to the buy side. And let me show you the draw on liquidity which we have marked yesterday. So these were the targets yesterday we were looking for. So both of these were our target in yesterday's price action. And here we have this high, which is basically previous week high, right? So you can see after taking this previous week high, price went into this consolidation. Good morning, Malik. Hope you are doing well. So here I will explain another model. So you can see this was our buy side liquidity on the 1 minute time frame, right? So what actually price did here after going into this buy side, price made a swing high here, this one, and after that price failed this bullish fair value gap, this one, Please let me know if you can hear me and you can see my screen. So here on the 1 minute time frame, I was trying to explain another model. Please leave a comment in the chat if you can hear me loud and clear. So here on the 1 minute time frame, you can see this was basically the bullish fair value gap. So price filled this fair value gap, right? And this bullish order block as well. And after that, price closed its candle body below this order block, right? So here price have made this breaker block, which is basically a bearish breaker. Right, like this. So as I have mentioned before, both mitigation and the breaker are basically the reversal patterns. As you can see here, how price created this breaker in the reversal. So let's say if you will take trade on this breaker, what should be your stop loss on this trade? You should have entered on this trade like this and put your stop loss above this candle body, right, which have created this bearish fair value gap and also failed this bullish fair value gap, right? So this is the safest place for the stop loss, and you can target simply to our trade like this, right? So this is another model to take trade. Here we had this buy side, so I am not into this trade. I just marked this for your understanding, for your knowledge. So your entry should be on this second candle after the price break below this bullish order block and failed this bullish fair value gap. So Malik, this is an clean example for the breaker block. So if you are looking for a breaker block, the price action or the recovery should be in the V shape like this, right? You can see how cleanly this price moved, right? And when we are looking for a breaker block, then price should fill an old order block with a good volume, right? How price filled this order block with this good big fat volume trade, and also created the fair value gap. And always confirm the breaker with the candle body closing above or below the order block, right? So let's say if you are looking for a bearish breaker, then you should wait for the price to close its candle body below the previous bullish order block, right? So here on this candle our breaker was confirmed, and we can take the trade on the second candle as it will retest that breaker area, right? So this is the discounted area of this bearish breaker block. We will take entry on this discounted area of this bearish breaker block and put our stop loss above, just above this candle high, which have created this bearish fair value gap and failed this bullish order fair value gap, right? So let's say if we had a small fair value gap here, right, like this. So let's say if we have a fair value gap like this, then we could put our stop loss just above the breaker, right? But for now we can see we have the fair value gap until this. That's why we are putting our stop loss just above this candle high. So we have a US bank holiday today, and we can see on the chart we don't have such volume in the market because of the bank holiday. Do you have any doubt about this entry model here? Please let me know if you have any doubt about this entry model or any confusion about this model. Let's see on the other hand what gold is doing. Gold is still in this range, so we can say that because of the bank holiday we will not see any breakthrough above these highs or to these lows. So by the way, this is the inverted fair value gap on the daily time frame. That means this is the hard time frame PDRA, right? So what price actually doing here? Price engineering liquidity on the both side, buy side and the sell side, and still in this range. So this is not a ideal scenario to take trade in. And on the NASDAQ we can see prices moving to the downside. So here we have opening range high and opening range low. So this should be opening range low, and this should be opening range high for the first 15 minutes. So here you should learn about the trade management as well. So let's say if the price will close below these lows, I will move my stop loss lower further, right? To minimize my risk, right? And I will book some of partials below these lows. So this is how you should manage your trade as well. This is another subject. After entering into the market, this is your job to manage your trade as well. Please drop your questions in the chat box. If you have any question about the markets. So I have explained yesterday's entry model here on the 5-minute time frame before, how price failed to make a new low here and created this mitigation block, and we also had a fair value gap in this mitigation block, right? That was another confluence for the confirmation. Price made advanced market structure shift here. So entry was here on this fair value gap, stop loss was below the mitigation block. So multiple bullish PD arrays were supporting the idea for the buys here, and we also had this higher time frame drawn liquidity, which was the previous week high. So here on 1 minute time frame we can see price is in this consolidation. Okay, we are in this consolidation, and as we have discussed before, because of the bank holiday we will not see any kind of you can say any kind of good move with the good candle formation and the big fair value gaps. So this is it for today's live stream. Please let me know if you have any question. We are going to end this live stream in like 4 minutes. So I'm going to sum up this live stream. We marked this breaker block entry model here, and we have seen the previous day price action, and we have marked this single model on the 5 minute time frame, which price have offered yesterday. This was the mitigation block on the 5 minute time frame, right? So I have explained this model to you before. So this was the only good opportunity yesterday to take the highs, which was here on the previous week high. Yes, Junior Harry, this is the concept of ICT, fair value gaps. So as you can read on the title, we are basically applying the ICT concepts on the chart daily from 9:15 a.m. Eastern to 11:15 a.m. Eastern. So you should join our live stream daily if you are interested in ICT concepts. Welcome, Karthik. Okay, great. Junior Harry, please come to the live stream daily. You are an interesting guy. We will definitely learn from you as you are the creator of this concept, fair value gap. Yes, I take trades daily on the live stream. So everyone should join us on the live stream daily at 9:15 a.m. Eastern, New York time zone. So this is it for today. See you guys in tomorrow's live stream. Have a good day. Bye.